Hey everyone, and welcome back to Economics Destination. Today, we're tackling a hot button issue, tax evasion in India. Specifically, how the super rich are using agricultural income to dodge taxes. We'll expose the loopholes, explore the impact on the economy, and discuss potential solutions. The agricultural income tax exemption, a well-intentioned loophole. In India, agricultural income enjoys complete tax exemption, regardless of the amount, thanks to Section 10(1) of the Income Tax Act. This exemption was originally designed to support small and marginal farmers, the backbone of India's agrarian economy. The problem: misuse by high net worth individuals and corporations. The problem is that this exemption has become a major loophole for tax evasion. Wealthy individuals and corporations often declare income from other sources, like business profits or investments, as agricultural income to avoid paying taxes. The extent of the problem: facts and figures. The sources reveal some startling statistics. In the financial year 2021, over 21 lakh taxpayers claimed agricultural income, with nearly 60,000 reporting agricultural income exceeding 10 lakh rupees. This suggests that a significant number of high-income earners are taking advantage of the exemption. A study by the National Institute of Public Finance and Policy, NIPFP, estimated the potential revenue loss from agricultural income tax exemption to be around 1.2% of GDP. In FY20, this translates to a massive 2.45 lakh crore rupees, or 11% of the projected gross tax revenue. Real-world examples of abuse, CAG Audit Findings. The Comptroller and Auditor General of India, or CAG, in a 2019 report, exposed several cases of tax evasion through misrepresentation of income as agricultural. The CAG reviewed 6,778 scrutiny assessments where individuals or entities claimed agricultural income above 5 lakhs. Shockingly, companies accounted for 57% of these claims, raising concerns about widespread corporate tax evasion. In many cases, the tax authorities granted exemptions without verifying supporting documents, such as land records or income and expenditure statements. This lax enforcement makes it even easier for individuals and corporations to misuse the exemption. Consequences: impact on the economy and taxpayers. The exemption's misuse has several negative consequences. Loss of revenue for the government. The substantial revenue loss from agricultural income tax exemption cripples the government's ability to fund vital public services, infrastructure development, and social welfare programs. This ultimately hinders economic growth and development. Unfair burden on honest taxpayers. While the wealthy evade taxes, the burden falls disproportionately on the middle class and other honest taxpayers. This undermines faith in the tax system and creates a sense of injustice. Arguments for taxing agricultural income, addressing the imbalance. There are several compelling arguments for taxing agricultural income, especially for high earners. Revenue generation. Taxing agricultural income, particularly from wealthier farmers and corporations, could generate substantial revenue for the government. This revenue could be used to improve public services, invest in infrastructure, and fund social welfare programs. Curbing tax evasion and money laundering. Taxing agricultural income would close a major loophole used for tax evasion. This would ensure everyone pays their fair share, promote transparency, and combat money laundering. Promoting equity and fairness. The current exemption disproportionately benefits wealthy farmers, while small-scale farmers often earn below the taxable limit. Implementing a progressive tax system for agricultural income would ensure fairness and prevent the rich from unfairly benefiting from exemptions. Proposed solutions: striking a balance. Here are several potential solutions to address the issue. Capping exempt agricultural income. Setting a maximum limit on the amount of agricultural income eligible for exemption would ensure that only genuine small-scale farmers benefit. Progressive tax rates. Implementing a progressive tax rate for agricultural income, similar to the system for non-agricultural income, would ensure wealthier farmers contribute more. Enhanced verification. Strengthening verification processes and requiring more detailed documentation would make it harder to misclassify income as agricultural. Continued support for small farmers. It's crucial to ensure that any changes to the tax system don't negatively impact small and marginal farmers. Targeted subsidies and support programs can help protect their livelihoods. Collaboration between governments. Effective implementation would require cooperation between central and state governments to streamline tax laws, data sharing, and enforcement. Conclusion. Tax evasion through agricultural income is a complex issue with serious consequences for India's economy and society. While the intent behind the exemption is noble, the current system is ripe for exploitation. It's time for the government to implement reforms that ensure a fair and equitable tax system, where everyone contributes their fair share. What are your thoughts on taxing agricultural income? Don't forget to like, share, and subscribe for more deep dives into critical economic topics.